Hi everyone, today we will be talking about financial statements. So financial statements are the end products of the accounting process. So this actually are the reports prepared by the accountant after executing the accounting process. The financial statements are prepared to provide information about the financial position and operating results of the business, which is very important in the decision making of the business owners or the management. The complete set of financial statements consist of the following elements, the elements of the financial statements consist of the assets, liabilities, owner's equity or capital, revenue or income, and expenses. So the assets, the liabilities, and the owner's equity or capital are the components of the balance sheet. They are also known as the accounting values or accounting elements. The revenue or income and then the expenses, so these two are the components of the income statement. So going to the assets, so the assets are the resources controlled by the enterprise as a result of past transactions and events, and from which future economic benefits are expected to flow to the enterprise. So simply stated, the assets are those things that are owned and used by the business operation, used by the business in its operation. Or to make it easier, lahat ng mga pagmamay-ari ng business ay tinatawag na assets. So for example, cash, land, building, and equipment, and etc. Liabilities. So liabilities are present obligations of an enterprise arising from past transactions or events, the settlement of which is expected to result in an outflow from the enterprise of resources embodying economic benefits. So if we're going to state it simply, liabilities are obligations of the business entity to its creditors, or to make it even more easier, liabilities, these are eto yung mga utang ni business. For owner's equity or capital, this is the residual interest in the asset of the enterprise after deducting all its liabilities. So assets minus liabilities is equals to owner's equity or the capital. Or simply stated, the owner's equity capital is the amount of money or property invested by the owner into the business during the start of its operation, and we call it initial investment. And then it is increased by the profit, so we have plus profit. It could also increase by additional investment, so that is plus additional investment. And it is decreased by loss, that's why you have the negative loss. And it is also decreased by a withdrawal. To make it simple, or to make it even more simple, owner's equity, so ito yung utang ng business sa may-ari nito. Now, for revenue and gains. So revenue and gains are two different income accounts. So when we say revenue, it refers to the income arising from the ordinary course of business operation. While gain, so this is income derived from the activities that are not in the ordinary course of business. So for example, for the laundry shop business, so the income from the washing of the clothes of the customers is our revenue because it is an ordinary course of business. It is an ordinary course of the laundry shop to wash clothes. But if, let's say, the laundry shop business sold one of its machines with carrying amount of 80,000, it is sold for 100,000 pesos. So it's not normal for the laundry shop to sell machinery. So therefore, this is an activity that does not form part of the ordinary course of the business, does not form part of the ordinary course of the laundry shop. So the difference of 80,000 and 100,000, 80,000 carrying amount of the machine and the 100,000 selling price, which is 20,000, is a gain. Now for expenses and losses. So let's start with expenses. So expenses are the gross outflow of economic benefits during the period arising in the course of ordinary activities of an enterprise, with those outflow result in a decrease in equity other than those relating to distribution to owners. So if we're going to translate it in our own local term, expenses simply means gastos. So gastos ng company or ng business in carrying out its ordinary course of business. So for example, rent expense. So that is if the business is renting a space. Then salaries expense for its employees, taxes and licenses, and then etc. The losses, on the other hand, are the decrease in assets or the losses arises from activities or events that are outside the ordinary course of business operation. So going back with the example with the laundry business. So if one of the laundry machines in the laundry shop with carrying amount of 80,000 is sold for 60,000, the difference of 20,000 is a loss. That is because the laundry machine is sold at a lesser cost compared to the carrying amount. So the carrying amount, by the way, is the difference between the cost and the accumulated depreciation. And we will be talking more on that soon in the different video. So we'll now proceed to the profit or loss. So there is a profit if the revenue is greater than expenses. And there is a loss if the revenue is lesser than the expenses. So a complete set of financial statements is composed of the statement of financial position, or we call it balance sheet, statement of comprehensive income, or we call it income statement, statement of changes in equity, statement of cash flow, and the notes comprising a summary of significant accounting policies and other explanatory notes, or simply notes to financial statements. So since you guys are still beginners in accounting, so we will be concentrating more on the three statements: the statement of financial position or the balance sheet, and then income statement and the statement in owner's equity. So in your screen right now is an example of a statement of financial position in report form. So as you have noticed, it consists of three main sections: the assets, the liabilities, and the owner's equity. Okay, so based on the statement of financial position, keep in mind, by the way, that the balance sheet or the statement of financial position is always dated as of. So as of siya. So based on the statement of financial position, Davao Laundry Services owned 995,150 pesos. So these are the assets. Also, Davao Laundry Services owed 133,000 pesos from its creditor. So this refers to the liabilities. So 995,150 pesos less the liability of 133,000. So what's left for the business is 862,150, and we call it owner's equity. So otherwise stated, the creditors of Davao Laundry Services have the right to claim 133,000 pesos of its assets, and then the balance of 862,150 pesos represents the claim of the business owner. The three elements of the statement of financial position is also depicted in the basic accounting equation: assets equals liabilities plus owner's equity. So as you notice, assets are placed at the left hand side of the business, and we call it debit. And then the liabilities and the owner's equity are placed in the right hand and at the right hand side of the equation, and we call it credit. So if we're going to substitute our equation, we have the assets of 995,150, and then we have liabilities of 133,000, and also we have the owner's equity of 862,150. So we have assets 995,150 is equal to the liabilities of 133,000 plus the owner's equity of 862,150. So the total is 995,150. So note that the two sides are equal, which is right, or which is correct, because always remember the rule that the total of the left should always equal to the total of the right, or simply total debits should always equal, or should always be equal to the total credit. Okay, so let's now proceed to the by the way, in order to get the ownership interest, so in order to get the equity of, or the ownership interest of the business owner, so we only have to make some changes or modification with the basic accounting assumption. So again, our basic accounting assumption is asset equals liabilities plus owner's equity. So in order to get the ownership interest, we only have to deduct the liabilities from the assets. So assets minus liabilities is owner's equity. So substituting the figures, or let's substitute the equation, we have assets of 995,150 less 133,000 liabilities. So the owner's equity is 862,150. So let's move on to the income statement. So income statement is another financial statement that shows the performance or the results of the operation of the business for a given period of time. So the result could either be profit or loss. So there is a profit again if the revenue is greater than the expenses. There is a loss if the revenue is less than the expenses. So to compute for the profit or loss, you only need to subtract the expenses from the profit or from the revenue. So revenue minus expenses, so that is equal to profit. So again, if revenue is greater than expenses, so that is profit. But if revenue is less than expenses, that would result to a loss. So we have here an example of an income statement under modified single step form. So take note that the income statement is dated for the. So it could be for the month ended, it could be for the quarter ended, it could be for the year ended, or whatever accounting period. So basically, the income statement provides the users the information if the business is earning a profit or if it is incurring a loss, or if there is no changes, there's no profit. There's no profit, there's no loss. So here in this example, the Davao Laundry Services has a profit of 22,150 because the revenue is greater than the total expenses. So there's a profit of 22,150. So 80,000 revenue less total expenses of 24,150, that is 23,150 plus the interest expense of 1,000. So the profit is 22,150. So the basic accounting equation can actually be expanded by incorporating the income statement components. So again, the basic accounting equation is assets is equals to liabilities plus owner's equity. So the owner's equity portion can actually be broken down as follows. So initial investment, so plus additional investment minus drawing plus revenue minus expenses. So let's substitute. So as you notice, so let's substitute. So there are assets of 995,150, and then the liabilities is 133,000 pesos. So for owner's equity, the initial investment is 850,000, and then there's no additional investment, but we have drawings of 10,000, and then the revenue is 80,000, so less the expenses of 57,850. So that would give us the owner's equity end of 862,150. So 133,000 plus 862,150, that is equal to 995,150, which is equal to our assets. So if you notice, we are now going back to the basic accounting equation. So the detailed changes of the equity portion is summarized in the statement of changes in owner's equity. So here we have the initial investment of 850,000, and then we have the profit of there is no additional investment. We have profit of 22,150, and then we have withdrawal of 10,000 pesos. 10,000 pesos. So in this example, we can say that there is an increase in the owner's equity by 12,150. So that is from 850,000 owner's equity beginning to 862,150 owner's equity end. So 862,150 minus the owner's equity. The owner's equity end of 862,150 less the owner's equity beginning. So it's supposedly beginning. That is 850,000. So the balance is 12,150. So this is the increase in owner's equity. And then the increase of 12,150 is due to the profit of the month, which is 22,150. And then the withdrawal or less the withdrawal of 10,000. So that would result to net increase in equity of 12,150 pesos.